The broadcast is now starting. All attendees are in listen-only mode.
Good morning. Welcome to today's webinar. My name is Matthew Darius. I'm the Professional Development Coordinator here at New York ASBO, and I'll be moderating today's call. Before we turn you over to our presenters, we just have a few housekeeping items to get out of the way. If you are connected by phone to hear the audio today, please make sure to enter in your audio PIN. You can find that on your GoToWebinar audio control panel. It's right on the typically right-hand side of your screen. Type in the number that it says into your phone, and you'll be all good. Secondly, if anyone has any questions throughout the webinar, please feel free to type them into the chat window, or we encourage you to type into the question window. That is also on typically the right-hand side of your screen, and you can type things in there, and our presenters will pick them out if they're really relevant to what's being said. Otherwise, they will hold off to answer them at the end of the webinar. With that out of the way, if you have any questions anytime about how to use GoToWebinar, please feel free to chat me. Again, my name is Matthew, and I will turn over the call to Deborah Cunningham for introductions.
Good morning, everybody, and welcome to the webinar. I am Deborah Cunningham, Director of Education and Research for the New York State Association of School Business Officials. Congratulations to all of you whose communities passed their budgets yesterday. This culminates much hard work by school business officials, and they deserve big credit, really, for leading their school districts and communities through the budget process. Today's webinar concerns tax cap reviews conducted by the Office of the State Comptroller. We know that lawmakers are right now debating whether to make the tax cap permanent, but this webinar is not about that. It's really about the integrity of the system. The lawmakers pass the laws, the Education Department issues guidance, the Comptroller sets up a portal in which districts can enter relevant data, school districts develop budgets that comply with the law and provide data to calculate a tax levy limit, and the Comptroller's staff reviews the calculations that school districts have made. Today's webinar will increase communication and understanding about these reviews that the Comptroller's staff conducts. Our presenter today is Patti Schachter, who works for the Office of the State Comptroller in the Professional Standards Unit of the Division of Local Government and School Accountability. Patti is responsible for providing guidance to regional staff and monitoring tax cap calculation reviews performed by the regional staff. Collectively, over the past 3 years, her team has reviewed almost 4,000 tax cap review calculations performed by regional staff. So we welcome your questions. Please enter them in the question box or the chat box as Matt has directed you, and we will take them if they're relevant to the content as we go. If they're more discussion items, we will leave those for the end. So I'm going to turn it over to Patti. Patti, welcome, and thank you so much for doing this webinar with us.
Good morning, Deb and Matt. Thank you to the Association of School Business Officials for inviting me here to talk to you today. And congratulations again to all of you out there. I know you're in post-approval budget bliss. So hopefully you'll be sitting back enjoying your coffee this morning and have an opportunity to just get acquainted a bit about what the Comptroller's Office is looking at when we do a tax cap review. Here we go. Back one. Sorry, we're just learning how to use the keyboard over here. Okay, the tax cap review outline for this presentation is as follows. We have summary and background information. We'll talk a little bit about the timing and the reporting. We'll talk a few more minutes than a little bit about the capital exclusion. I have a few miscellaneous areas that I'd like to discuss, and then just a few common problems that we've noted over the years of doing tax cap reviews. Let's see. We began reviewing the school districts during the 2012-13 school year, and you were the first people that we did the reviews for. That's why you have a special place in our hearts over here at OSC. At this point, we've done, as Deb said, over 4,000 reviews. And we've done, besides school districts, we do counties, cities, towns, villages, fire districts, and special districts. At the end of this review cycle, this 2015-16 school year, we'll have completed a review of all the school districts that we are required to review. Beginning next year, 2016-17, the school districts will follow the same 3-year cycle as the other local governments do. Because we started with the school districts the first year, we didn't do very many. The objective was to finish everybody every 3 years, but because the school districts were our first try at it, we were a little slow getting out of the starting block. I will mention that there's an overwhelming compliance by the school districts. I think there's only this year one school district that has not filed. So you guys are the champs of all the municipalities in filing. All right, a little background. The tax cap review is always based on the coming year's calculation. So our review this year for the school districts will be for your 2015-16 school district. You will be contacted by OSC's regional office. I think most of you are probably familiar with the regional office that your school district is attached to, and probably the staff that you'll be dealing with. Normally, the reviews will begin in June. We try to stay out of your way while you're working on your budgets, and the reviews will run through the beginning of July. There are 1 or 2 regional offices that have already started doing their reviews. In fact, one area is almost finished. So there is a slightly different timeline from region to region depending on the workload that the examiners have. When you are contacted, you'll be asked to supply the documents needed to complete the review. And again, these documents will vary from region to region. We ask that you send us the documents in as timely a manner as possible. It will make the process quicker and easier for both you and the examiner. The examiner will begin the process by comparing the information that you entered on your online form against independently received information. And I'll speak a little bit as we go along about the different areas that we look for independent information from. We always start with the prior year levy amount, and we will compare these against tax roll documents. Tax and Finance has shared these documents with us, and we will look at what was actually levied last year against what your levy beginning amount is. Once we've confirmed your prior year levy amount, we'll take a look at the tax cap reserve. In cases where a district has exceeded the levy amount without having an official override in place, the overage must be placed in reserve. And normally this is due to an error or oversight. Of course, because you all have to vote on your budget, so it would not be the same as with some municipalities where they just pass a resolution and there are different issues. There shouldn't be any other reserve amounts entered in the online form on the line that says tax cap reserve. We have noticed in the past, and I'll mention this again during common errors, that some school districts have put in capital reserves or other types of reserves in that line. This is strictly used for a tax cap reserve. Once we've taken a look at the reserves and gotten that all squared away, we'll look at the pilots. The pilot amount from the previous year form is carried forward, and although you do have the ability to change it, we strongly encourage you not to change it unless the amount is material. Of course, then the next question is always, well, what is material? And for that, I do not have a definitive answer. All questions that would pertain to changes in pilots due to materiality from the previous year should be directed to SED. And at the end of this presentation, we'll have a contact number for you to call. The current year pilot amounts should be based on your payment schedules of what you expect to receive, not what you would actually receive. Again, the amounts should be the same. You should not change the amounts unless it's really necessary. We really encourage you to keep them the same from year to year as far as prior to current. Carryover amounts. The carryover amounts can only be used in the current, based on the prior year's levy, and can only be used in the current year. They cannot be carried over from year to year. There is really no reason for you not to use the carryover. I know some districts, some municipalities are hesitant to use it. It is not required that you use it, but there is no reason why you shouldn't, from our perspective. You have the ability to be able to use the entire amount, a part of the amount, or none of the amount. And again, that is entirely up to you. When the examiner comes in to calculate your levy limit, they will take a look at that amount and will encourage you to use it. When they calculate it on our form, not your form, they will use the carryover amount. This year, there are no pension exclusions, so there is really not much to say about pension exclusions this year. There is a lot to say about capital exclusions, though, so we'll start talking about those now. The prior year's capital exclusion line is pre-populated on the online form that you will fill out at OSC. I know that last year that was sort of a new twist, and we had many discussions with SED about this before we decided that this was the road that we were going to take. If you decide to make a change to the capital exclusion, you would need to contact OSC's Monitoring and Analysis Unit for assistance. They're the folks that you would talk to about working in the online form. I'm sure many of you have spoken with them before. And again, at the end of the presentation, there is a slide that has their names and phone numbers for those of you who have not contacted them before. If you attempt to change the prior year's capital exclusion on the current year's form, you will be asked to also change it on the previous year's form. When you make a decision that you want to change the prior year's form, you need to make that call to MAU. They will ask you about what the particular reasons are that you're going to change the form, and then they will put you into what's called resubmit. When you are in resubmit, you will be able to change the prior year's form in order to make that figure jump into the current year's form. Just be aware that when you change the capital exclusion in the prior year, it could affect your levy limit from the prior year, and it could put you into a reserve situation. We've had a few school districts that have called and have looked at doing this, and then upon changing the numbers, realized that that would have put them into a reserve situation last year, and then have elected not to. So again, take a few minutes to go back and take a look at that before you finally hit that submit button. Well, excuse me. When we calculate the capital exclusion for the coming year, it's based on the allowable expenditures and debt accounts that were listed from the ST3 codes on the SED property tax guidance. We have included a link to that in this slide, although I'm sure most of you are very well familiar with those codes. When you use those codes and you do your deductions for debt and expenditure, please keep a copy of those accounts, as the examiners will be asking to look at those accounts. That would be the supporting document that they would need to verify those numbers. Any expenditures that you have that are supported by reserve and fund balance will be deducted from the capital expenditure total. And again, the examiners will want to take a look at those accounts and confirm that the numbers are correct.
Patti, this is Deborah. I have a question for you, if you can comment on this.
Sure.
This year was different compared with all the years I can remember, because the governor didn't put out executive budget runs. And so school districts, I know in the SED guidance it said use the governor's budget recommendations for building aid and transportation capital aid to create your local capital exclusion. What are you recommending school districts do, if anything, in this? I mean, I think many school districts use the present law numbers that were published November 15th by the Education Department. Can you comment on that at all, that little difference that happened this year, and what school districts should have done?
Well, I think most school districts did exactly that. They used the numbers that either were put out by SED, or I believe that Questar has also put out numbers that school districts were calculating from.
Yeah, I believe Questar did it and SED did not, yeah. Okay. But they got the numbers from SED.
In some respects, it almost uncomplicates things, because we're all using the same numbers now. We've got a set of numbers from the governor now, and we've got our state aid runs from DOB and or SED. And so now we're all on the same page. A lot of times in previous years, there's been that disconnect where a school district has calculated based on BT, and the examiners are looking at SA numbers. So in some ways, maybe the playing field has been leveled.
So that now that we have a budget and we have runs, school districts should be going back in and correcting their numbers if they're different?
Yes, I will get to that in a further slide, so I'll repeat myself. I apologize, but since we're discussing it now, yes, they should most definitely go back and correct their numbers.
Thank you.
Amounts, the online form will be opened until at least after the tax-free certification. So there's plenty of time for school districts to get in there and update their numbers. Okay. Expenditures, someone asked me to repeat a slide. Expenditures supported by reserve and fund balance will be deducted from the capital expenditure total. What I'm saying here is that any expenditures that you've had, well, you'll put the it sort of is a wash, because you'll put the expenditures up into your expenditure line, and then you'll deduct the reserve and or fund balance that you'll be using from that amount. So it's a wash, but I just want to remind officials that if you have expenditures that are supported by reserve and fund balance, that will reduce your expenditure exclusion, is basically what I wanted to say. Did I make that clearer for you?
Yes, because you don't need local revenues for that, because you have the reserves and the fund balance. Yeah.
Okay, before we do the coming year capital expenditure, I just wanted to talk a little for one more minute about the prior year expenditure. Since this is carried forward, and there's no ability for the school districts to change it in just the regular reporting of the online form, these examiners will be looking at that, and if the amount is the same, they will not go back and look at the prior year expenditure because it's been carried forward. However, if a school district has made a change to their form and done a resubmit, We will be alerted to that by the monitoring analysis unit, and we will take a look at if they change the prior year amount. We will take a look at that amount again. So as far as the prior year, in most cases, if that just moves forward, that's just a given number that we're working with. If it's changed, we will take a look at it. Now for the coming year capital expenditure amount. We verify the state aid using a couple of different resources. We take a look at the state aid reports that are available on the SED website through the SAMS module. We will look at the DOB website for the enacted budget, or we will be on the SED website looking at it, one or the other. We also look at the transportation aid output estimate, that TRAE-EST report on the SED website when we're calculating the coming year's transportation aid. And we have a copy of the building aid detail report, so we can take a look at the deferred aids, the Chapter 97 aids, the BCS expenditure and aid. And we have some spreadsheets that were provided to us by SED that list the Chapter 97 projects that are pending out in the different school districts.
There's another question on.
Okay, hang on. We've got a question here. Let's take a look at this. Fund balance used to just want to confirm that fund balance used to support capital expenditures does not mean transfer to capital in the approved budget. Expenditures arising from transfer to capital are not deducted from the total, but included as capital expenditures, correct? Hang on, just give me a minute to think about it. I'm not sure I understand the question, so can I just defer that till the end of the program, and I'll try to think about it while I'm talking, and if I can't get to answer it now, I will answer it through Deb Cunningham so that she can disseminate it to the group.
I think this might be a question that came up a lot. I was at SED when we developed the guidance on the tax cap about how do you count local capital expenditures, and the governor's office was very insistent that you only count expenditures. You don't count transfers to capital. So I think that question may be getting at that. There is a logic to counting the transfers to capital, and but the division of the budget was not persuaded by that. So we only count expenditures and expenditures that are made in the year in question. So if that helps.
Okay, well, thank you, Deb, for stepping in there. I'm a little bit nervous and flummoxed, so I don't know if I'm processing things properly. So I just want to make sure that when I answer these questions that I answer them to the best of my ability. It's hard to serve two masters when you're doing the presentation. So I appreciate you hopping in there. Okay, on to the next slide. All right, some deductions and additions to state aid. Chapter 97 projects this year, we have gotten a spreadsheet from SED. And in that spreadsheet, they list any possible Chapter 97 project in which an SA 139 has already been approved, and there will be the possibility that you could receive Chapter 97 aid during this school year. The spreadsheet is basically anything that is SA 139 approved with the 18-month wait period included, but does not have a FCR and or a CSC date of approval yet. There's also the building condition survey piece, which is a piece this year that we will be removing from the capital exclusion. The interest rate recalibration was again delayed another year. I know that's not news to you guys, but according to SED, that number was not integrated into the building aid figures, so we are not going to be looking at that at this time, unless you previously had integrated into your figures and you would like an examiner to take a look at that if they're doing a review, you should mention that to them when they're talking to you about it. Chapter 97 projects. If the SA 139 shows no receipt date, or if the date is past the appropriate database for inclusion, then there's no aid projected on the 2015-16 run. So in order to be aided in 15-16, that SA 139 should have had a receipt date and time for inclusion in the November 2014 database. If there is a date and it was included, as I said previously, then the aid was projected. And then in that case, the examiner will be, I'm going to proceed here, I'm sorry. So if the aid was projected and the examiner will ask you about that. Are you going to be getting any of your Chapter 97 projects through this year? And if it's unlikely that you will be getting them through, then the aid should be removed from your building aid amount. OSC will verify the amounts that should be deducted from the state aid using that SED spreadsheet. So it'll be an approximation on what you may or may not have deducted. The numbers don't have to match exactly. As long as they're within a reasonable range, we'll be willing to accept the number that you've used. If there's any question when the examiner is taking a look at your documents, they will contact us here in Albany, as we have the spreadsheet here and all the building aid runs, and we'll do the interpretation here. And if there are still questions or hesitancies on our part, we will contact SED and get guidance from them. For the building condition survey, neither the expenditures nor the aid can be used in the capital exclusion calculation. We have the building aid detail run so we can get an idea of which school districts are getting BCS aid this year as opposed to ones that will be getting it next year. You have to make sure that if you're removing this aid, that you're also removing the expenditures that go with the aid, and vice versa. If you're removing the expenditures, that you remove the aid. And again, any kind of a detail that you can provide the examiners so they can verify it would be greatly appreciated. In most cases, the districts that are reporting BCS aid in this round are going to be reviewed prior to July 1st, 2015, when you will get actual aid. So you'll have to use the projected aid amount for the deduction from the total building aid. And again, as I said, make sure that you retain all your documentation pertaining to the expenses and the aid for the OSC review. I don't know if you've all been contacted yet by the regional offices so you know which of you are being reviewed. But this year, it's pretty easy to figure it out. If you haven't had a review, you will be reviewed this year. If you have had a review, unless there's a reason why OSC would need to come back because of possible issues or questions from last year, then more than likely you will not be being reviewed by OSC this year. For any deferred aid that you get, please keep all your documents, your report, aid runs, letters that you might get from DASNY, anything that we can use for verification for that deduction would be appreciated. SED has also granted us here in Albany read-only rights to SEDS, so we can get in there and take a look at your account if we need to for any reason, if there's any questions. So that's been helpful for us in trying to figure things out without driving you crazy with questions. Once we verified all of your expenditures and aid numbers, the capital exclusion calculation is complete from our perspective. And I know that this is always the biggest area of concern. After that, we want to take a look at your proposed/adopted levy. For anybody who has not had their budget passed, I guess we're still calling those the proposed levies. We want to verify this amount with you in the school district based on your budget proposal and the adopted budget, or we'll take a look at the property tax report card, which has the levy amounts, and we will use that as a backup if for some reason we cannot get our hands on a budget. All right, if you find that you've made an error on your form, again, these forms are not closing until at least July 22nd, more than likely at the beginning of August, although I do not have a confirmed official date. But you do have time to correct your error on your online form. If we discover an error when we are out doing your review, we will notify you and ask for some sort of a clarification. Sometimes there are some issues. We've had some issues coming up with Schedule G transportation issues with some of the school districts. There's been deductions to transportation aid, and so we've had to go back and rework that a bit. If for some reason the clarification doesn't resolve the issue, OSC will recommend the changes to the school district, and we will note changes on our internal review sheet. We do not correct your online form. Your online form is your reporting mechanism. OSC does not make any changes to that form at all. Our corrections are strictly internal on our own internal document. Once we have finished the calculation, we will generate a letter based on the examiner's worksheet, not the online form. So if we're in a place with a school district where there is some sort of a discrepancy, you may or may not get the letter that you were hoping for. If you do disagree with our decision, you should contact SED's Office of Educational Management. And again, that name and contact information is at the back of the slide presentation. And then we will start a discussion process with SED and possibly with you in the school district to get everything worked out. There are a couple of, before we get to the common problems, there are a few different letters that you may or may not get based on the decisions that we come up with. The first one used to be called materially within, and I know a lot of you have gotten that letter. We have now changed that to no findings. It was just strictly because legal felt more comfortable with that verbiage. There was no subtle changes to our decision process in doing the form that led to that change. So if you get a form this year that says we have no findings, that means that as far as we are concerned, you are materially within the tax cap limit. We have sort of a margin for error in our calculation where you can go up to $1,000 over and still receive a materially within letter from OSC. However, for tax-free certification purposes, that does not fly. So you'd still need to be within your levy limit to the 0 or more in order to be able to certify for tax-free compliance. So I just want to make that clear. There is some verbiage in the letter about that, but I just wanted to make that clear when you get that letter. The other two letters you could get would be over with an override, in which case your school district voters have agreed to go over the levy limit, or over without an override, in which case that means that in most cases there was some sort of an error in calculation in which we now find ourselves with a requirement on your part for a reserve. So those would be the three types of letters that we issue. All right, a few common problems that we come into. First of all, I want to stress that this is not an audit. This is just a review of your tax cap calculation. We're not going to be in your face for weeks and months at a time over this. It is a very simple review process. So I don't want you to be flummoxed or upset or nervous by the process. It's really just a verification of numbers. Big common problem we have is the pilot information. We've gone back and forth quite a few times discussing things with SED, and we've decided that the pilot information should stay the same from year to year. So what you're putting in this year for coming year will become your prior year next year. It makes things a lot simpler, and it saves that big jump in change in levy limit. Changing things in one year has an adverse effect sometimes in the next year. So again, if you feel like you need to change a pilot, take a look at those numbers, recalculate things, and know that it has to go back as well as be current before you make those changes. Another common problem, and this was basically last year because of the changes we made in making you unable to change the prior year's capital exclusion. There were a lot of changes last year to the capital exclusion calculation. We haven't experienced that much yet this year. There may be some due to changes in aid amounts that you feel would be advantageous in your calculation for you to make, but I don't anticipate it will be as big a problem this year. Another area is not providing the examiners with information in a timely manner. I know you guys are incredibly busy. I'm in awe of the amount of paperwork that you move through your offices. But the quicker you get the stuff to the examiners, the quicker we can get you through this process, get you your letter, and you can move on to other issues that you have. Another issue we have is difficulty in getting documentation for particular calculations or numbers that are used on the form. So just please keep your backup documents until you're sure that you're not going to be reviewed this year. After that, I mean, it's good to keep them, but after that, I can't fault you for, you know, putting them under a file or whatever. And then again, another big issue is forgetting to update amounts before the form closes. It's an opportunity for you to update your aid numbers or whatever numbers you want to make everything match what you have in your budgets and get you started off in the next year in a very good and clean manner.
Patti, before you go to the next slide, I just wanted to comment on that last number 6, which is that we had on the books a law to require the recalculation of interest rates for state building aid for capital construction, and then it was put off another year. This is the building aid reset, and that's it. It amounted to $45 million statewide that went to school districts that was planned not to go if the reset went through. So school districts, if they on March 1st included the aid they were expecting with that going through, and then when the budget passed, they're getting more aid, they need to go in and correct those amounts to reflect the additional aid from that change not happening. So I don't know if I explained that clearly enough, but there was some more aid that came with this budget, and as a result, school districts need to make an adjustment to their capital exclusion calculation.
Okay, the information that I'm sorry, because the information that I had discussed with state aid was that that was not, well, I guess maybe they were talking about the final budget aid amount, so maybe not the amount the school districts were using, but the budget aid amount that's out there now does not include the interest rate.
It doesn't include it, but what that means is that school districts are getting more aid. So if they reported on March 1st, assuming that was going to go through, and they were going to lose the aid, and then they got the aid, they have to make that adjustment is all.
Yes, they should make
the additional aid.
They should make the adjustment. We highly recommend it. All right, I'm open now for questions. If there are more questions, we're going to mute for a minute and look at what we've got here, and then we'll be rejoining you. Okay, I'm back. We have a few questions. Some I can answer and some I will have to get back to you on, but I will read them all and let you know which is which. Number one question is there any consideration to remove pilots from the calculation? That I would have to defer to maybe Deb Cunningham as far as what legislation might be in effect, but as of now it is actually written in the legislation, and so there is no consideration on our part at this point to remove it from the calculation.
We do have a proposal related to pilots. It's not to remove it from the calculation, but to add it into the base year levy before you multiply by 2% of the CPI to get your levy growth. And so we think that would give you credit for those local revenues received by virtue of pilots. So that's our proposal. And we do have on the ASBO website, we have a page under news of ASBO reports, and we do have a report on adjustments to the tax cap to help school districts. And there's a number of different recommendations. Some are more minor in nature, and this one on the pilots I think would fall in that category, and some are bigger and more substantive. But this paper was developed with the Education Conference Board, which is a group of educational associations, to give ideas about ways that the tax cap could help school districts accomplish their mission of educating children.
Okay, on to the next question. I believe the most updated guidance does not require districts to deduct transportation capital aid that relates to transportation equipment other than buses, as those expenses are not counted in the capital exclusion calculation. Is that accurate? I know what you're talking about. This had to do with that whole issue that I just discussed, that I touched on about Schedule G deductions. There are some expenses that come in under Schedule G that are not eatable and are allowed to be removed. I can't answer the question precisely. I will get an answer for you and get a precise answer on that for you. But I think that you're talking about Schedule G issues. And yes, there has been some guidance written by SED about that. The next question is, how do we ensure that the OSC examiner did complete the review? Do they contact the business official by email? Once you hand over all the documents, I believe most of these are happening at desks in regional offices. I don't really think that anybody is having a review in their office. So the OSC examiner will put everything together and send the forms into the coordinator. There's one tax cap coordinator in each region, and they will review the forms. At that point in time, it comes up to Albany, where I review it, and then after that, it gets put in a queue, and once a week we send out emails with the review information. So I'm not exactly sure how long the process, that is another question, but I'm not exactly sure time-wise if I can give you a definitive answer on that, but it should not be a long process. We try to turn things around very quickly up here from the point in time where I get the email. I send them out every Thursday, so anything I get after Wednesday would go to the following week. So once it hits Albany, it should never take more than a week for you to get your email. Now, the emails, I believe, are going to the superintendents, not to the business office. So that could be where there may be a disconnect, where you're not seeing them as quickly. So again, I will let Deb know about that. The next question, if you use a capital exclusion of a lower amount than you have calculated, is that unacceptable? For example, you calculate a capital exclusion of $1 million, but only recorded an exclusion of $500,000 and still stay within the tax cap. Is that okay? I believe that you need to use the entire amount, at least from the aid perspective. So I'm going to, again, have to get back to you. I'd like to have some conversation with SED, but I don't believe you can pick and choose the amount. I believe that you are required to use the entire amount. Deb, do you have anything you want to say on that issue?
Yeah, I think I would need to look at that further. I don't have a quick and ready answer.
Okay, so we'll talk amongst ourselves and get back on an answer. Again, how long does the review process take after the documentation is submitted to OSC? Again, you should expect a letter within a week, maybe 2 weeks, if by any chance I'm out sick or whatever, but everything flows through me, so I try to turn everything over within a 7-day period. Next question. In regard to expenditure supported by reserves, this is my question. If I'm using $50,000 from my debt service reserve for offsetting next year's capital expenditure, that has to be deducted to arrive at the actual capital exclusion total. Deb, are you going to answer that?
Yes, I think I can. So if you are using reserves or fund balance to support your expenses, those have to be deducted. It's like you didn't need local revenues for those expenditures, and your calculation is to get at your local capital expenditures. So those are deducted. Just the same as aid that you receive for those expenditures is deducted.
Okay, next question. Using the entire amount in the tax cap calculation, but not using it in your tax levy will penalize you in the subsequent year. This seems unfair. I believe you're referring back to your previous question, and we will get an answer for you. I know a lot of the tax cap stuff, it's all new, and so there's still a lot of questions and things that are being ironed out.
And I think it reflects the fact that many school districts have levied actual taxes below their tax levy limit, and they perhaps are not feeling that they're getting enough credit for that. The carryover was intended to give you some credit, at least for the subsequent year, for that, but we believe that the carryover provision could be improved a little bit. Currently, it's whether your proposed levy is less than your tax levy limit without your exclusions. But since most people would have some capital expenses in their proposed levy, it's hard to get under that amount. So we are recommending that the law be changed to allow a little more for carryover. So if the carryover of your proposed budget is less than your allowable levy limit with permissible exclusions, then you would get credit for that. So I think that would remedy that to some extent. So again, I refer you to our website and the paper that we have on suggesting a few technical changes and bigger changes to the tax cap to help school districts out.
Again, I want to reiterate that OSC is reviewing the legislation as it is. We are just reviewing and the discussion that or interpretation is coming through SED and or DOB, and then any legislation that may happen subsequently. But we are reviewing based on the law as it stands now. So we're doing our best to interpret things as we hear from SED.
Yeah, absolutely, and that's an important distinction.
Let's see. Does the review happen every year, or if it happens for one particular district, once in 3 years? The review should happen once every 3 years with the school districts, as I mentioned at the beginning. It happened once every 4 years because the first year we got so few done because everything was so new. Subsequent to this last round of reviews, this review year now, there is a 3-year time period in which we will do reviews. As it stands now, a school district will get a review once every 3 years, with the possibility of being reviewed more if there were some questions or issues with the review in a prior year. But there's no hard, fast rule on that, or hard, fast rule on how we will approach them in the future. There, we have some, I'm going to go ahead and just push ahead. We've got some contact information. This is in the first slide. Since we don't have, if there's more questions, feel free to type them in there. But meanwhile, we've got contact information for the SED Office of Educational Management. We've got Greg Diepenbach, the general phone number there. At the State Comptroller's office, we've got for any questions having to do with the online tax cap form, you would contact the Monitoring Analysis Unit. There's an 800 number there with an option 3 in the voicemail, or you can contact Jay Phillips, who is my counterpart in the Monitoring and Analysis Unit, at that number. You can contact me in professional standards if you have any questions. There's my phone number, and I apologize, for some reason I did not put any email addresses, and I sincerely apologize for that. My email address here at OSC would be my first initial P, my last name, at osc.state.newyork.us. I'll give you a minute or two on this slide if you want to copy down any numbers. I'm assuming most of you will be able to get a copy of this presentation. And then the following slide has the regional offices for the Office of the State Comptroller and lists their phone numbers if you have any questions that you want to direct to them.
Patti, if you are able to provide the email addresses, you could get it to us after, and then we could make that available to everyone.
That would be fine, and I apologize. I don't know what I was thinking when I didn't put them, except usually by the time I'm asking a question, I really want to talk to somebody. So personally, I'm usually looking for a phone number. So I apologize for those of you who are more electronic oriented that I did not provide that information for you. I guess if there are no other questions, I want to thank you all for attending today and for listening to me talk about the review. Again, this is a review. This is not an audit. So we want to thank all of you who have gone through the process and made it easy for us and worked in conjunction with us to get them done and get those letters out to you. And I always welcome hearing from any of you if you have any questions regarding tax cap.
And New York State ASBO adds the thanks to everyone for attending, and to Patti for this interesting and informative presentation. It was very helpful and very timely, as it turns out. So thank you very much, Patti, and we look forward to working with you again.